chat, please. Great. Awesome. Brandon from Maryland. Fantastic. What part of Maryland, Brandon? Dominic from Madison, Wisconsin. Waldorf. Okay, got it. Welcome, Matt. Welcome, Dominic. Awesome. I guess we'll give people a few more minutes to join us, and we'll make the introduction. Tag from Germantown, ND. Fantastic. Awesome. This is fantastic. We have Shamil from Jersey. Welcome back, Shamil. Good to see you again.
Thank you. Looking forward to a great session today. Thank you, Julius. I hope you're doing well.
Absolutely, I'm doing well. Thank you so much.
Okay, guys.
Great. Well, Leslie, when do you wanna take it away, or you want me to wait for a few minutes to let more people join us?
We can get started.
Okay, beautiful. Well, in that case, I'll just do a little intro and then let you to get fully started with everything. Welcome everybody to the exciting world of multifamily meetup, presented to you by XSITE Capital. I am Dr. Julius Oni, the CEO and co-founder at XSITE Capital, and my co-host today, Mr. Tenny Tolofari, our Director of Acquisitions and co-founder, and Mr. Leslie Awasom, our Director of Operations and co-founder, and also the presenter for today. He needs no introduction for those that are familiar with this meetup. He is the brains behind XSITE Capital, and he is the man who kind of keeps the glue that keeps all of us together going, He is an incredible partner, and without him being who he is, we wouldn't be able to have accomplished what we've accomplished so far in the last 2 years, which includes acquiring more than $107 million of real estate, acquiring that under management. A lot of that has to do with the incredible work that Leslie has done with underwriting, with operating the company, and with managing the assets that we manage. So the man needs no introduction. He is incredible, and he's about to share with us today a little bit about what he does with asset management. And I think it's going to be a very robust conversation. I myself, I'm sure I'm going to learn a couple of things from the man himself. So without further ado, Mr. Leslie Awasom, take it away.
Well, thank you so much, Julius. Thank you so much, Dr. Oni. And thank you, everybody, for joining us. Before I jump in, I'm just going to give a quick shout out to Mr. James Ray. I see him hiding over there somewhere in the audience. If you guys don't know James Ray, he was like the very first attendee of this meetup when we started it back in 2019. He is also a very experienced multifamily operator and has been a great friend and mentor along the way. So just wanted to give a shout out because I see him attending the presentation today. So like our CEO and co-founder, Dr. Julius, our presentation today will be talking more about asset management. A lot of people that come and attend our meetups are either passive investors or have some experience investing in single family properties and might be looking to transition into multifamily. So we want to share that experience that we had transitioning from single family to multifamily, and hope that the knowledge that we share is going to be able to help you along your journey, not just to help you become an active operator yourself, but to understand how these assets are managed, so that if you're looking to invest as a passive investor, you have a better understanding of what to look for, what to expect when you're evaluating these assets. So the title of a presentation today is a single family to multifamily asset management transition, and it's presented by XSITE Capital. So what is asset management, by the way? So asset management is a process of managing an asset or series of assets to ensure it's performing as it should be and showing a good return. You know, in multifamily, the asset manager plays an important role because that's the person that is required to make sure that that asset is performing as projected. So as a real estate, as a multifamily asset manager, you are responsible for optimizing the value and return on investment of each property. As an asset manager, you have the fiduciary responsibility to make sure that the best decisions are taken on behalf of your property owners, and you're also required to have your owner's best interests at heart. And it's not just an owner's game as well. As an asset manager, you are also responsible for providing a very good community to your residents. We take full responsibility and take a lot of pride in the ability to be able to provide homes for other people to live in. So as an asset manager, one of the key things that I make sure I look at is to make sure that every community that we own is a very comfortable space for the residents to live in, and we're providing enough resources for our residents as well. So these are some of the roles and responsibility of an asset manager. The asset management of a multifamily asset starts from the acquisition, from creating the business plan. We start by, my role for the company starts at the pre-acquisition phase, from evaluating each property, each opportunity that our director of acquisitions brings, and says a broker send, we gotta look at it. I gotta start looking at the numbers of this property and coming up with a business plan. The development of that business plan begins at that phase, and we evaluate each property to make sure that it is going to meet our projections or has enough income and growth to be able to sustain the returns that we want to provide for our investors. As the asset manager, we also work very closely with lenders to make sure that the property is meeting projected performance. This is something that is a little bit different on the single family side. With these properties that we buy, the banks usually have some requirements that have to be met. There are different kinds of loans that you might take on to purchase a multifamily asset, and there are certain metrics that you got to meet in order to keep that loan in good performance. In good performance, for example, right now, bridge debt is very, very popular in the multifamily space. A lot of operators are getting bridge debt. But with the bridge lenders, there are certain NOI or return income metrics that you got to meet in order to stay in good terms with those lenders. So as an asset manager, we got to keep an eye on all of that. Got to work in very close collaboration with the lenders to make sure that the property is meeting the projected performance. The asset manager also manages the due diligence for the purchase or the disposition of the property. Now, this is very important because during the due diligence phase is when you look at, you go in and dig deep into each asset to see if there are any surprises or anything that you might not have seen in your underwriting or just from evaluating the property from the surface. And this also helps you as an asset manager to be able to identify things that you would need to address immediately upon takeover, or other opportunities that might have been omitted during the underwriting process. So the asset manager manages the due diligence in collaboration with the property management company. My role is to find ways to always increase the value of the property, increase the value, not just in the income sense, but increase the value as in building a strong community for the tenants as well. We work very closely with the property management to market an asset to increase its revenue, work with the leasing team to minimize vacancies, preparing and predicting long-term financial projections, manage cash flow of a property, conduct market research on a constant basis. We always have to stay on the property managers, making sure that they're evaluating the market, making sure that they're pushing rents, in a way that is aligned with where the market is at that period of time. So the market research stays ongoing throughout the whole of the property. Asset management also involves a lot of data analysis, which is one of the reasons why I love it, because you could really look at numbers, create scenarios, create graphs, create projections, and you can let the numbers tell you the story of what the property is doing. And you can look at those numbers and identify areas where you need to make some fixes. So it involves putting a lot of data together and formulating a plan that is viable for that particular asset. And the asset manager is also responsible for hiring a property manager, because the property manager stays in the property and manages on a day-by-day basis, while the asset manager oversees that management process and makes sure that the business plan is being implemented. We also develop capital and operating expenditure budgets, evaluating, monitoring, and revising property financing strategy. Again, like Mike Tyson said in one of his quotes, that everybody has a plan until they get punched in the face. As an asset manager, you can make a good plan, you can underwrite a property and have all kinds of good projections. But once you get in and start managing a property, things can turn rapidly, things can change quickly, and you have to make adjustments accordingly. Like I'll give you an example of my foray into asset management. In my very first 2 weeks as an asset manager, we had a fire in the complex. So after I've gone through the phase of being happy of taking over a property and looking forward to the future, the first challenge I had was dealing with the fire and the asset that we took over. But glad to say we handled that situation very well. Nobody was hurt, and the residents were properly taken care of, and the unit was renovated and worked. It also gave me an opportunity to evaluate my property management team and see how effective they are in dealing with this crisis situation. So sometimes those challenging situations are opportunities for you as an asset manager to make changes or to see areas where there lies more opportunity. So how does this differ from single family, for managing single family properties? So prior to getting into multifamily, I own a couple of single family assets, which I manage myself. And the typical process of, at least for me at that time, as a working professional buying single family assets, the process was like identify a property, you buy the property, you rent the property, and you collect cash flow and pray nothing happens. And you just hope the market keeps appreciating and collecting rents from the tenant, and pray that your tenant does not mess up that unit. There's not so much more that you could do as a single family landlord to make changes into your property on the ongoing process that will significantly affect the value of the income, like it is with multifamily asset management. So with single family renters, once you've purchased the property and have a tenant, there are a limited amount of things you as an operator can do to increase the income. But with multifamily, because the properties are valued according to the income they produce, as an asset manager, your role is key in determining the valuation of each property that you manage. Your role is key to determining that the returns are met for each investor that is invested in that property. So it's a numbers game. This chart is a little bit off, but this is just a page from our underwriting template, which shows income assumptions. And this is how we underwrite properties. We look at the income, we project income based on current performance and based on what the market is showing. So you look at the numbers and you evaluate all these numbers. As an asset manager, you want to look at these numbers and make sure that this income projections that you have are projections that you could hit. You work in close collaboration with your property manager, who has a very, very good in-depth knowledge of the market that you're going into, to make sure that your rent growth projections are within line, that your value add projections are within line. All the other line items like your loss to lease, your vacancy, and everything is within line. So once you have all those income projections, you also, and these are all the numbers that as an asset manager, you have to keep an eye on for the duration of the whole of that property. You got to keep an eye on all these numbers to make sure that you are meeting all these metrics, because a slight change or significant change in one of these numbers would greatly affect the returns that you're able to provide for your investors. So it is important that from the onset, you start formulating a business plan based on a robust communication with your property management team and good market research. And once you have all your income assumptions in place, then you do the same thing for expenses. This is where, as an asset manager, you could create a lot of opportunities for your investors and really improve a property. For example, we could take over a property where it's not properly managed. You have a lot of expenses. For example, one very good expense that we work very hard to take care of right off the bed when we take over a property is the water expense. Many properties do not have a water savings program. As an asset manager, once you identify that, that's an opportunity to be able to increase the bottom line of that property by decreasing the water expense. So what we'll do in an example for a property like that, we'll do like a water savings program within the first year of ownership. And that usually significantly decreases the water bill and increases the cash flow over time. The other line items, from advertising to contract services to administrative costs to trash removal to payroll, all these line items, as an asset manager, you have a role in maintaining, in making sure that the numbers that you're producing on a month-by-month basis are according to your projections. So we keep a close eye and monitor all these numbers as well. And all these numbers add up to the bottom line where you have here, like the principal. You want to be able to pay your debt from the income that you're getting from this property. So the asset manager has to keep track of all the numbers, making sure that the property is producing enough income to pay the debt and to be able to pay the investors, or for the return on the projected returns from the property. I don't know if you can see this clearly, but on the red line is just a deficit of returns that the investors are that you're unable to make. It's like a pref deficiency for year 1 and year 2. So taking over this property as an asset manager, my goal will be to decrease that prep deficiency as much as possible, find other opportunities within the management of the property where we can increase the income and decrease the expense, such that over the period of time of holding that property, we have less and less of a prep deficiency and able to pay the investors on a timely manner. So how do we achieve this projected numbers? I don't know if you guys have heard of key performance indicators, KPIs for short. We have a proprietary spreadsheet that we build ourselves to be able to track all these numbers and create graphs on a month-by-month basis to be able to see how the property is performing, like comparisons between where we are and where the property is going. So we do this on a month-by-month basis, tracking every single property, making sure that we're meeting the returns that we have. It's not just about the numbers on the income or the expense. We also track resident experiences and perception. We keep an eye on the apartment ratings of each property that we're managing. And we occasionally do surveys for our residents to see what kind of amenities or what kind of more services we could increase to improve the overall lifestyle within the property. We keep a close eye on the occupancy. That's the physical occupancy and the economic occupancy. The physical occupancy, that is the number of tenants that you actually have in the property, versus the economic occupancy, which has to deal with the income, because you might have a bunch of tenants that are not paying the full rent. You have a little bit of loss to lease, or you have some tenants that are not paying their rent on time, and you have some bad debt. That all goes into the economic occupancy. We keep a very close eye on the financial performance and include a plan whenever possible. The goal is usually to increase the gross potential rent. If you're in a market where the market is growing, you want to keep increasing rent as long as the property tolerates. Keep a close eye on vacancy, concessions, rent collected, the total income, and we'll also keep a track on the other income. Other income includes stuff like washer dryer fees, pest fees, pet fees. These are all little fees that can play a significant role in increasing the value of a property. So as an asset manager, you always want to look at opportunities to be able to increase the income, and other income is a good line. Other income, there are many line items within the other income category that you could use to significantly increase the value of your property. We also want to look at the operating expense per unit and compare that to the market average to make sure that we're not spending too much money on each unit on a per unit basis. And we also want to look at the operating expense ratio. That is the ratio of the expense to the income. We always like to keep that number somewhere below 50% or right around 40% for Class B or Class A assets. And the net operating income, of course, is a very important metric to keep track of because the net operating income determines the value of the property. For anyone who's not familiar with how multifamily assets are valued, it's dividing the net operating income by the cap rate. So when you're able to increase the net operating income on a property, you can significantly increase the value of a property. As a matter of fact, in the US right now, where the average cap rate in the US is about 5%, a $1 increase in NOI will increase the value of that property by $20. So you could imagine what you could do as an asset manager to significantly increase the value of a multifamily asset, which is something that is not available in single family rentals. With single family rentals, your rent or your income is highly dependent on what the market is doing. You could do some things to decrease the month by month expenses, but as far as the income is very limiting what you could do. We also keep track of bad debt, cash flow, any delinquency on the property. Once we start seeing delinquency going up, we want to make changes within the management or the business plan to mitigate that. And water reimbursement ratio is something that we keep good eye on. Some properties in some markets, you are allowed to charge the residents back up to 95 to 100% of the water expense. And you might meet properties where the water expense is being charged back at 60 or 70%. That's also another opportunity to increase the income. You also want to keep track of traffic. If traffic starts decreasing over time and your property is not fully leased, especially in a peak season, then you might need to increase your marketing. So any significant changes in these numbers will require some kind of action from you as an asset manager. So we keep track of these numbers very closely to make sure that we are on track, staying on the path that we want to be, and staying within the business plan. Also want to keep track of the rejected and skipped. That is the people that came in and filled out an application and never showed up, or the ones that got rejected. Also want to keep track of evictions. If evictions start speaking, then and you the only property in the market that is experiencing that, then you might want to work towards changing your tenant demographic, or maybe rebranding the property, bringing in more quality tenants, more high-paying tenants with higher income, so that you avoid that having to deal with that turnover and eviction expense. We also keep track of move-ins, number of expirations, retention rate, and we keep a very close eye on the market, what's happening on the market. Right now, in some markets in the Southeast that we're investing in, rents are increasing in a very high rate. We've had the opportunity to increase rents, for example, in our Columbia asset since acquisition in April of this year by $150. And we did that by monitoring the average market rent. Going into the property, we knew that the property was below market rent. So on acquisition from day one, we were able to increase rent by $50. But the market kept climbing, which is same thing that a lot of markets in the US are experiencing right now. And our occupancy rate stayed high. So when your occupancy rate is quite high, like 99%, 100%, it means that your rents are too low. We want to keep occupancy somewhere around 95%. That's when you got rents right where the market is, or kind of pushing above the market a little bit. So as long as we stayed at 99%, we kept increasing and did not get any pushback. $50, $30, $20, $50. And before you know it, over a space of about 5 months, we had increased rents by $150, and we are still 99% pre-leased. So by keeping track of those numbers and taking weekly, sometimes monthly action, you are able to increase the performance of your property. One other thing that the asset manager is highly involved in is the value add plan. which I forgot to put on this slide. We keep track of all the units that we're renovating, keep track of the renovation costs to make sure that it's within the budgeted amount. Also keep track of all the CapEx item that we on the road in the business plan, making sure that all the renovations are within the business plan. Again, work hand in hand with the property manager. As an asset manager, you want to be highly involved, but also empower your property management team, especially when you have a good one, to be able to do a good job for you, because you don't want to be on a day-to-day management of the property. You want to empower the team that you work with to do a better job for you. So great leadership skills, very, very important for every asset manager, because as an asset manager, you're not just managing the asset, you're managing people. You're managing a team of people that you're empowering with your assets to be able to implement the business plan that you designed, so that you're able to produce the returns that you projected for your investors. You have to be an excellent communicator. Communication is key. Having talking to your property managers, like giving suggestions in a question, so that they can think through it and come up with solutions. Listening to your property managers, listening to suggestions to your property management team, especially when you have a good one. I know that it's easy to there have been some stories of some horrible stories with experiences with other property management companies. But once you have a good property management company, you want to work really hand in hand with them to create a strong plan for managing the property and empower them to be able to do the right job. And if you do that, your property manager will go to bat for you. That has been our experience so far with our property management team. They do a lot of work for us on the background to make sure that everything is being implemented. We work very closely with them from the acquisition phase for designing the business plan to managing that business plan all the way during the hold of the property. And having strong analytical skills is key. You got to be able to look at these numbers and formulate a plan. You got to be able to look at these numbers and determine when things are not going as planned and make the changes that are needed to make things go the proper way. And in summary, as an asset manager, you got to be a good manager of people and a good manager of numbers. My asset management team does not just consist of myself. I do have other team members that I work with. There are some that have more experience than I do and some that have less experience than I do. But I do lead the asset management team, and I'm open to conversations and discussions and listen to everybody's opinion to be able to come up with a good plan for the property. So as an asset manager, you gotta be strong, develop strong communication skills, and be very good with working with other people. Excuse me, guys. And with that said, that's all I got for the presentation. I just wanted to say thank you, and thank you guys for listening. And I'm open to answering any questions that you have. Here you have myself, wonderful CEO, Dr. Julius, and Director of Acquisitions, Mr. Tenny Tolofari. Open to any questions that you may have. Drop your questions in the chat, please.
Thank you so much, Leslie, for that wonderful presentation. I guess I'll kind of wait for folks to drop some questions in the chat. And actually, you don't necessarily need to drop a question in the chat. You could just unmute your audio and ask any questions that comes to mind. There we go. How many units do you suggest a person have before they get a property manager? Leslie?
So if you are buying multifamily assets, I'll suggest you get a property manager from day one. Even if it's 10, 8, or 16 units, it's suggested that you get a property manager and become the asset manager instead of being in the weeds and doing the day-to-day work.
How about assuming if it was smaller multifamily, what stage do you recommend that people get manager?
So it depends. For me personally, I would say if you love the aspect of managing properties on a daily basis, then maybe when you start getting above 8 units, then you want to get a property manager. But there's nothing wrong with getting in the weeds and getting some of that experience yourself, because it's also going to help you once you transition to bigger assets, and also going to help you to set better expectations for your property manager as well.
Got it. Daphne was asking, what books do you suggest people read to prepare for their analytical skills?
If it relates to multifamily investing, one book that I really like when it comes to dealing with analyzing our properties, I'll say, is The Hands-On Investor by Brian Burke. The title of the book can be deceiving because it seems like it's written for passive investors, but it's actually very, very detailed. It goes into a lot of details about the numbers aspects and looking at that and how that affects the overall performance of the property. So that's a great book to have.
Awesome, awesome. And any other questions at all, or comments or feedback? Don't be shy. Yeah.
Hey, Julius had a question.
Thanks, Shamil. Go ahead.
Yeah, I wanted to ask. I know that you guys have been working together and you're building out your team. What could you describe what that process is like when you were actually going into that phase? Because I know that can be a challenge when you're trying to find people to work with.
That's a great question. Leslie, you want to take a stab at it? I'm happy to chime in too at some.
Go ahead, Julius.
Oh yeah. So I think just to your point, multifamily real estate in particular, but real estate in general, it's a team sport. You have to collaborate with other people that you call your core team, but then you also have to interface with the other folks outside of your core team, like the brokers, the bankers, the lawyers, things of that nature. When we connected, we formed our partnership based on complementary skills that we had. Like, for example, we have a director of acquisition who is completely fearless, Tenny, and who is able to approach any broker regardless of how decorated they are, and has the flexibility to move his family from the Northeast, from Washington, D.C. to our target market in the Southeast, and who pounds the pavement on a daily basis just to get us the deal flow that we currently have. So that was a great strength of his, and we can do what we do without him. We have a director of operations that is a fantastic, calm, cool, collected human being who is incredibly detailed oriented when it comes to underwriting, and is able to conservatively underwrite these deals and communicate with multiple people to get us the appropriate projections that we need to have an accurate and conservative underwriting and business plan for the deals. He's also fantastically excellent at just the basic operations of the company. And then we have me, who is more investor facing, and I love interacting with the investors. I love going out and trying to come up with the bigger vision for our team, even though we all do that part to some extent. So we had significantly complementary skills, and the marriage of those skills is what really expedited or made our growth exponential. So I'd say find people with complementary skills. Obviously, it's a little harder initially, but some of the places that you can find that is obviously conferences, meetups like this, things of that nature. But we were lucky. Leslie and I worked together, and he actually introduced me to multifamily real estate in the first place. So we were lucky in the sense that this naturally and organically just happened. Yeah.
Oh, that's wonderful. Thank you.
Thank you, Shamil. I think there's some other questions. Deborah was asking, what are some of the items you look at when you see a property available for sale that you would determine immediately you would make these improvements and increase cash flow? I guess she's asking about what are the immediate value add ideas that we usually would implement to improve the net operating income of a property. Les?
Absolutely. One thing you look at, one good thing that you look at that could be a little deceiving is the occupancy. If we see a property and it's 100% occupied with very little bad debt, that tells me that the property is probably under rented. That's why a lot of people are moving over there. So there might be opportunities to increase the rent and increase cash flow. And any property too that has not gone any kind of value add or renovation over the past 5 to 7 years, too might present a great opportunity. I also mentioned some other expense line items like water. Water is a great savings factor that you could really use to decrease the overall expense in a property. And then you have a lot of other income line items that you can easily miss out on. For example, one property we purchased, when we purchased that property, the previous owner was charging tenants $2 in pest fee. The market standard is $7. So just by adding just that $5 per unit, that adds up. For example, in that same example that I gave about the NOI, you do the math, that adds up on the income, and then you might see a property that has a bunch of units that have washer dryer connections, but nobody has washer dryers. That's an opportunity for you to buy washer dryers and rent it out to the tenants and create another income flow. There's also opportunity to create income flow from doing like bulk cable contracts where you purchase the cable and you work with companies to provide the cable and the internet to the tenants, and you're able to increase the income as well. So other than the obvious ones, which is like market rents, below market rents, there are very many other smaller opportunities that you can really fine tune to improve the overall performance of the property.
That's fantastic. Thank you so much, Leslie. Alethea was asking us, I would love to invest in multifamily, but I don't know where to find leads. Alethea, can you expatiate a little more on that? Are you talking about finding the properties?
Yes.
And
find the properties. I have people who, like I have a friend recently, just matter of fact, yesterday, they have a duplex or a triplex, but when you say multifamily unit, you're talking about more than that, right?
Usually we talk, for XSITE Capital, we're typically looking at 100+ units, but obviously multifamily is anything more than one technically, but the residential multifamily is 4 or below, so quad or below. And once you get to 5+ units,
it's commercial.
It's kind of considered commercial for like lending purposes, So yeah. But if you are looking at like, duplexes, triplexes, quads, obviously they're just not as common as single family, but they are out there, I would imagine, but that's certainly not our forte.
Okay.
Yeah.
But I'm saying for someone who's new, who's never invested in a multifamily unit, would that be a good idea to start with something big like a 10, 12, 14 unit and above? And I guess you said you have to partner with someone. You can't do it alone. You have to have a team behind you in order to do something like that, right?
Absolutely. Alethea, that's a great question. For me, the more units, the better. That's what I think personally, because the more units you have, the more you can take advantage of the economics of scale. And believe it or not, sometimes with the larger number of units, 5+, you actually now can have access to non-recourse loans. Now you're essentially buying those apartments almost like you're buying a business. The net operating income of that property is what ultimately determines the value of it. Does that make sense?
Yes, it does.
So Could that mean that you may have to partner up with somebody, maybe an equity partner, maybe a couple of equity partners to take down the property like that? But you may find that you're able to accelerate your wealth growth by approaching those units first. But yeah, and not limiting yourself to a duplex, a triplex, a quad, but certainly, Leslie, I'm curious to hear your feedback on that.
Can I chip in real quick?
Yes.
Yeah, this is Tenny here. I know you, in addition to what Julius said, you had mentioned about how you get leads, how basically you find the deals. So when it comes to commercial, what we found out is that 90% of all real estate or commercial real estate transactions are done through brokers. They have the keys to the cookie jar. So if you want to find deals, we've decided as a company to work with brokers because they have 90% of all deals. Now, there are some individuals that have decided to do the 10%, which is they do mailers. We've tried that. They approach the sellers directly. They call the sellers and all that stuff. Usually those don't really work because brokers spend a lot of time putting these properties together. They know the market very well, and they put together the marketing package for the deal, and they're able to get the best price for it. So a lot of sellers, when it comes to commercial, likes to work with brokers. So to answer your question, how to get leads on multifamily or commercial properties, you want to identify your market, and then you want to identify the brokers in that market. Of course, there are different levels to the kind of broker you work with. They have the ones that do between 5 all up to 100, and that's where they stop. And there are some that does from 100 all the way to 500 to 1,000 units. So you just got to figure out where you want to operate in, and then you find the broker that does that, and then they'll be able to provide you some deal flow. Make sense?
Yes, a real estate commercial broker, you're saying.
Yep.
Correct.
Okay, thank you. I appreciate that.
Excellent.
You're welcome.
Excellent. Leslie, you were gonna make some comment?
I was gonna actually call on Tenny, the broker expert, to say something to Alethea, but it's all about relationships, building relationships with the brokers. That's the key.
Absolutely. Daphne asked a question: how do you find properties in a hot market? After being unsuccessful working with real estate agents, MLS and pre-market, is it just a waiting game or look in a new market?
You have to stay in the face of the brokers. Don't give up because the market is hot, because there are people that buy properties in those hot markets. And the way you do is by staying in the face of the brokers, and know that if in a regular market, it takes you maybe 100 tries to get one deal. In a hot market, it might take you 300 tries. But there's a reason why that market is hot. And again, there's a reason why cap rates are compressed. The lower the cap rates, the lesser the risk. So if you want to buy in a hot market, secure market, then you have to stay in the face of the brokers and keep hitting the pavement and fighting for those leads. And once you're able to build that reputation with the broker and they know, like, and trust you, they might open the doors to showing you deals before everybody else sees it. And that has been our experience so far.
Absolutely. And just remember that the real estate game is mostly is filled with a lot of rejection. I read something somewhere that 90% of the time you're going to get rejections, but 10% of the yeses you're going to get are going to be the ones that change your life. So don't worry. Anytime you get that no, you get that disappointment, just chuck it in as part of the 90% of the no's you're about to get, because the yes is around the corner. So just keep that in mind. I think we addressed the duplex triplex questions for Alethea. Francis was asking, thank you for sincerely presenting. 2 questions. I assume your time is very valuable, and aside from out of the goodness of your heart, why do a presentation like this? Interesting. Of what benefit is it to you and your team to educate others? Wow, that's a good one. I know Leslie is dying to answer that one.
Francis, thank you so much. You want to go, Julius? Go ahead.
No. I just wanted to ask the second question. With $10 million in assets, How much dollars can one expect to clear in profits after taking care of loans, investors? So from Leslie, please go for it.
Francis, why we do this education, why we take the time to educate people, it's the foundation of what our company was built upon. When we got into multifamily as a team, and when we started going into this market and going to multifamily conferences, and realizing that there were not a lot of people from the community that we come from that knew about this asset class, or the community, I'm talking about a community of healthcare workers, a community of immigrants, did not know anything about multifamily assets. So that is why we created a company, so that we could go out and share this knowledge to members of our community. And we believe that the journey to growing wealth begins with growing your mind. That has been our experience over the years as we've been able to educate ourselves, study a little bit more. Then we see ourselves being in the position where we could go out and buy these assets. So by providing education to members of our community, by providing the education necessary to members of our community, we are educating our potential investors about the opportunities that are available in multifamily assets as well. And one very important thing that we've learned along the way is the philosophy of giving. The more we give to people in our community, the more we get back in return. So and a lot of people listening to this conversation today are members of our investor community, and having them here listening to us, understanding this asset class is a benefit to us, because there's nothing better than having an educated investor when you're going into this asset. So the more educated our investors are, the better they're able to make investment decisions. When we bring assets to them, it doesn't take long for them to jump on it and invest money, and we all grow together. So for us, the education is a very, very important piece. We will continue to do this, and I hope you continue to attend and continue to learn as well. I don't know if our CEO wanted to add something onto that as well.
No, I think you answered it perfectly. I think when you give value, you receive value, and that value may not necessarily come in the form of that person investing in you, but guess what? The universe has a way of kind of making it worth it. So we truly believe that to our core, and so we just believe that we will just continue to give as much value as we can, answer questions as transparently as we always do, and somehow it's always worked out fantastically well. And for the second part of your question, Leslie, do you want to take that, or do you want me to take it?
Yes. Says, of what benefit is it to you? Oh no,
it's about if you have $110 million plus in assets, how much dollars can one expect to clear in profits?
So with the assets, most of the assets that you buy in collaboration with your investors. So it depends on the structure that you go in owning those assets. For most assets that we own, the investor own about 80%, and investors can own 80 all the way up to 90% of those assets. So while you own $100 million of real estate on the assets, do realize that about 70 to 75% of that $110 million is provided by the bank, right? Although as the value increases, you're able to capture that increase in value that comes out at the end. So owning that much assets in markets that are growing, let's say, for example, for our $110 million of assets under management, we're able to increase the value by $10 million on that portfolio. Then as operators, we're probably going to end up gaining about 20% of that $10 million, and our investors will take 80%. So about an 80-20 split. So that could come out to be $2 million. Just giving rough estimates, but it technically should be higher than that. You see, baby Kike joined us on the meetup, so she wants to take part too. She's a future a real estate investor.
This is a future real estate investor. She wanted to join the meetups. Yeah. So, but yeah. So I mean, and just to even further expatiate on that, it all depends on, like just like we say, it's a team sport. So there's always a bunch of general partners versus limited partners in some of these deals, and but the investors certainly own the vast majority of any assets that we own, because obviously they're the equity partners. I think Ferdinand was asking, could you please explain RUBS, Resident Utility Bill Back System, and how it is implemented as a strategy to raise property incomes if you've done so before?
So RUBS is essentially charging back some of the utility costs back to the tenant. And it's done using it's a software that you use to be able to evaluate how much electricity is being consumed by the tenants, and then you're able to bill back some of that amount of money back to the tenants. It's done in different ways. Some people bill back on a fixed amount depending on the size of the unit, and some people actually bill back according to the consumption. So if you find a property where there's no electricity bill back to the tenants, where the previous owner has been paying full price for the electricity, then you could use that, you could implement RUBS in there, and you're able to capture some of that income. For example, you might have a property where the total expense on the utility in the annual basis is maybe $120,000, and the current owner is paying a full amount of that expense. And you're able to, let's say, bill back 75% and get some of that income back. By doing that, you're able to increase the value the net operating income by about $80,000. That significantly increases the value of the property over time.
And for anyone who is interested in just joining our investor community as XSITE Capital, please feel free to, I just dropped a link in the chat. Please feel free to fill that out. That will automatically sign you up for our newsletter and things of that nature. And also, if we have any other new deals, we'll certainly be able to reach out to you. I think somebody
just... Before you ask the next question, I'm just going to say we are working on a very, very special opportunity that might come to life in the next few days. So if you ever have any interest in investing in multifamily syndications as a passive investor, this will be like a really, really good one to jump on, and the spots are going to fill out quick. So make sure you use the sign up link right above to sign up.
Yes, I apologize for putting in the wrong link. I think the correct link has been placed in the chat. Thank you so much. And yeah, to Leslie's point, that particular deal is it gets me excited because I'm just smiling about it. I think our last two deals were definitely overraised or oversubscribed pretty quickly. And I expect this one in particular to oversubscribe really quickly. But we'll go right back to the questions. I think Mark wanted us to talk about any software we use for managing properties or tracking KPIs.
So we build our own spreadsheets. So we do have subscription to RealPage and Yachty that we use to pull data and compare what's happening in the market. We use those to get our data sources from the market, and we build our own spreadsheets in-house that we use to be able to track all that data, all those KPIs, to make sure that we're keeping track of everything. I'm blessed to be surrounded by a bunch of engineers that are Excel geniuses, and so we come up with all these cool ideas of what we want to see in our KPIs, and then we were able to go back and build out, and that's what we use. For the KPIs itself, we don't use the software, we build our own spreadsheets, but we track that data from different software sources as well.
And for specific investments of specific apartment communities, the property managers that we have, they also have their own internal softwares that they use to manage that obviously we get access to because we get all the data from those two, so that we can update our investors on a monthly basis about how the property is doing and things of that nature. I think we may have addressed almost all the questions currently. And if
I have a question, if you don't mind.
Please go ahead, Dion. That's exactly what I was going to say, that you should just unmute and ask questions.
So I know you guys are dealing with a lot larger units, but if I found like, let's say a 5-unit building that's vacant and needed some repairs, how do I go about evaluating how much I should purchase that property for if there's no like, no income coming in or any of that? What's the best way to look at that?
Awesome.
That's a very good question. The best way will be to look at comps, right? See where I'll say you see where the property is at right now. You see where it could be, what other comps in that market right now are producing, the numbers that they're able to get on that property, and you come somewhere in between, but more on the lower side, because it's going to take a lot of work for you to be able to put into to purchase that property. And you also want to look at the comps on a per unit basis in that market. And then you factor that into the amount of work that you have to put in, because at that point, you got to think of it as you're just buying the structure, not necessarily the business and the income that it generates at that point in time. The seller might try to paint the best rate, the most rosy picture for you of what is going to happen once everything is working out great. You can go with that evaluation, but factor in the amount of time that it's going to take for you to get there and adjust your cost accordingly.
Yeah, I think that's the way you got to approach it. You got to like underwrite it conservatively. What is what are the rents that you conservatively could get on that deal? And what's the CapEx? What's the capital expenditure that you're going to have to expand on that deal to get it there? And all of that is going to factor into what price works. And obviously combine that with the comps that Leslie just said, and you should have a good idea of the price that you should pay for it. But if you do not know how to underwrite and you're completely clueless about what that even entails, then maybe you should consider joining or visiting our Tuesday night underwriting class. It's free. It's run by Leslie and our underwriting team, including Manny, and they can teach you how to do that. So that wouldn't be a problem at all. So I think Deborah was asking about a real page or Yadi. I think
Yeah.
Tenny already gave the correct names in there. Great. If there's anyone at this point, we approaching the 7 o'clock mark. We have about 30 more minutes on the meetup. Typically, we like in the last 30 minutes of the meetup just to do more of an interaction, networking, have people kind of introduce themselves and talk about their interest and where they are in their real estate journey, so that we can get to know a little bit about each other. So, but what we ask of you, if you can, is come on video. So if you're able to come on video, you'll be the first one to talk. So I literally just go down the line with anyone who is able to come on video and have them introduce themselves. If we run out of people who are on video, then we will start getting some people come on who are not on video. So fantastic. I see some people coming on video. Thank you so much. It's so fantastic to see your beautiful faces. Yeah, look at that. Gorgeous faces. Well, let's get this introduction started. I think the first person I got on here is Lilia. Can you please go ahead and introduce yourself, where you're from, what your interest is, what you're doing with real estate, maybe where you'd like to see yourself in about, in a few years. That would be awesome.
Hi, everybody. I'm Lilia Uy. I'm a realtor here at South Florida.
Awesome.
I'm, what do you call this? I want to also start with multifamily, and if ever I can make a deal here. Thank you, guys.
Thank you so much, Lilia. I think you definitely can. Anyone can. If we can, you certainly can. It's just a matter of harming yourself with a lot of education, being around other people that have the same mindset and are trying to do it just like you are. and eventually you'll find your clan. And a lot of times also, what you need to do is maybe start investing passively first, seeing how it works. And that is going to empower you to be able to convince other folks that, listen, I have done it. I've been there, done that. This is what I was able to achieve with it. And it'll be a lot more easier to get your client of not just partners, but investors. Judah.
Hi, my name is Judah. I'm from Baltimore, Maryland. I actually went to school with Leslie.
Awesome, Judah.
Welcome, Judah. Great to see you, man.
Good to see you too. A couple months ago, I spoke to Leslie. I did very little research about it, but I've actually spoken to a couple people about investing in properties. I'm looking to buy my first property to start off small. And eventually I would like to see myself with a nice portfolio. I give myself about 5 years to have a decent sized portfolio.
That's amazing, 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 Judah. Well, we definitely believe that you can do it. You know, you just gotta, my advice is, you know, figure out exactly where you want to be in, 1 year, 2 years, 3 years, 5 years, and reverse engineer. What do you need to do on a weekly basis today, starting from today, to get there? That has been magical for us as XSITE Capital. We are maniacal about reverse engineering our goals. Every quarter we meet. We just did that this past weekend, and we come up with our goals for the quarter, and we break it down to every week, and we go crazy to achieve those goals on a weekly basis and hold each other accountable. So please keep that in mind. Dwayne.
Hey, good evening, good people. How's everyone?
We're wonderful. Thank you so much.
Excellent, man. Hey, so again, my name is Dwayne, as you alluded to, Dwayne Turner. I am a realtor based out of North and South Carolina. I also do commercial brokerage and investing. I'm looking to really stick my toe in the water this coming year, 2022. Currently looking to leverage some land acquisition and some different things like that to leverage up the capital to be able to go ahead and start moving into different asset classes like multifamily and I'm industrial. I mean, I'm down to invest wherever the need is, man. Find the need and fill it, as A.G. Gaston would say. So my vision's all over the place, man. But in 5 years, my team here at brokerage team will be flourishing. I'll be, 8-figure millionaire in my investments and different things that I'm diverging my talents and energy into. So hopefully looking forward to doing some deals with you guys, man. So that's what brought me this way, man. I actually just seen this on Meetup a few days back, man. I figured I'd check in with you guys. So
thank you.
Grateful to be here, and thank you for the opportunity to introduce myself.
Thank you so much, Dwayne. We really appreciate you, and we're certainly in the same market, so there's a high likelihood that we may be doing some deals together. So keep on pressing.
I will get your contact.
Drop your contact in the chat, Dwayne, so we can save you and reach out.
We'll do.
Absolutely. I think we have Deborah next, and Alethea Ferdinand after that.
Hello, I'm Deborah Shackleford. I have attended these meetups for maybe about a year, and they are very informative, just awesome. All the information that you give everyone has just been awesome, terrific. So I am looking to get involved with multifamily investing, and so I'm just gathering information at the moment.
Yeah, thank you so much, Deborah. Thanks for all the support, for joining us. And certainly we hope to continue to make you proud moving forward, bringing in quality, information for you and helping you along on your growth and your journey in multifamily real estate. So I think Alethea is next, and then Ferdinand.
Hi. My name is Alethea. I am a retired nurse, and a military veteran, and I dipped my toe in the water about 6 months ago into real estate investing, trying to do single family, but not doing very well. So I just go into different groups on Meetup, trying to get in where I can fit in. And basically, I've decided to try to do multi-family because I was told that's right now that's where the money's at, but also for long-term wealth building, it would be a good idea to get into that, and now is the good time to do it. Ultimately, my reasons for wanting to do multi-family units is because where I live at, there is a high number of homeless veterans. And so there's a shortage of housing for homeless veterans. I am a homeless veteran coordinator for my church, and I was once a homeless veteran myself. So I know what it's like. But the shortage is even more prominent for female veterans. And so I want to invest in multi-family units so that I can try to negotiate contracts with HUD and with the VA to try to build more available housing units for homeless veterans, because it's a disgrace to have so many of us on the streets, especially the women.
Wow.
You know, the issues with the females are so different. So my issue is more social, as well as wealth building. So hopefully I'll find a group of people that can steer me in the right direction and show me some insight, and maybe find a team that I can grow with to do that.
Alethea, that's an incredible story. Thank you so much for your service. And you have an incredible why. Yes. And when you do, and you focus on that why, the sky is the limit. Actually, the sky is just the beginning of the, so I would say, focus on that why, continue to educate yourself and strength, equip yourself with the knowledge that is required to achieve those goals that you just mentioned. Certainly, stay in touch with us. We'll be more than happy to contribute whatever we can to helping you grow and to grow alongside with you to achieve those goals. Obviously, we are not necessarily in development, but that type of why that you just mentioned to us is incredible. And I mean, our why was to take the gospel of multifamily real estate to as many people in our communities as will listen to us. And that's our communities of underrepresented minorities. That's our communities of professionals. That's our community of healthcare workers, because we didn't see a lot of these people represented in the conferences that we were visiting. So, and that message has significantly resonated with our community. I mean, look at this meetup right now. It feels like the UN, because
it's diverse.
Everybody is represented, and that warms my heart and warms our hearts. And messages like yours, missions like yours, whys like yours, really inspires us in many, many ways. So please keep pressing on. We'll be right there cheering along with you.
Thank you.
Thank you. Yeah, Ferdinand. And Johannes afterwards.
Hey, can you guys hear me?
Yes, now we can, sir.
Oh, thank you. Thank you. Yeah, so first and foremost, thank you guys for the presentation. A lot of gems, has been dropped, and then, very informative. So my name is Ferdinand Frimpong, and I live in Columbia, Maryland. So somewhere when the pandemic started, 2020, I work from home. So I started looking into real estate investing. So I've been reading, learning, going through YouTube videos, and attending some workshops and also meetups. So I've been learning, but really I have not gotten any deal yet that I wanted to invest in. And one of the problem I've been, something that I've been struggling with as I keep on learning is whether to get into single family or multifamily, you know, and some of the answers that I get is, oh, start with the single family to know more about the in and outs of it, and then get into multifamily. Some of them are saying, no, especially Leslie, I listened to your interview with Rod Cliff, and then Rod is always saying, you know, most of the people that he interviewed, you know, say, hey, going back, you know, I won't start with single family, I'll go straight into multifamily. So I really want to learn more about multifamily. That's been my struggle, whether to start with single family and multifamily. So I'm here to learn, and I believe you guys can give me an advice where to start.
Absolutely. We are here for you. And thanks for highlighting that interview that Leslie did with Radcliffe. It was an amazing, inspiring interview, and we definitely were proud to have him be on there and representing us. But yeah, the journey is yours to decide, you know, but certainly if you want the answers from us, you know, we are big multifamily advocates and evangelists. So the answer for us is very clear. Multifamily is the way, no matter how small it is. The bigger you can go, the better. If what you can put a team together to achieve is a 4-unit, do it. It's all, and if you want to go fast, go by yourself. But if you want to go very far, go with the team. You know, so that would be my 2 cents feedback for you. But stick around, be with us. We'll be more than happy to share everything we know with you, and hopefully we'll be, you know, part of each other's growth moving forward. Johannes.
Yeah, absolutely. Good evening, everyone. Always my favorite meetup for sure is with XSITE Capital. I'm Johannes. I'm a professor at Johns Hopkins University. I'm based out of the DC area. I live here in Arlington, Virginia, and I've been investing in real estate for the past 2 years. XSITE Capital has obviously been a huge inspiration, following the work very closely and learning from underwriting to really everything about this business. So I have a portfolio, mostly multifamily. I've got some industrial. I've also now started investing in self-storage and some other private equity plays, as well as some tech startups. So if anybody's interested in doing stuff in this area, feel free to reach out. I'm always looking for new opportunities. And just to give everybody a little bit of inspiration, just last week, I got an email from one of my sponsors. I'd invested in a deal in May, and we are now getting offers 4 months, 5 months later, $10 million above the purchase price, which would mean that I doubled my money in 5 months, right? So if that goes through, then you know, that's a pretty good IRR. I'm pretty excited about that one.
That's a great one, Johannes. Yeah. That's the best segue into what I'm about to say. The property we just acquired in April, we acquired for $12.5 million, and we are getting offers for $17.5 million 6 months later. So $5 million more. So yes, the market is hitting up. What you said is absolutely right. Multifamily is the way to go, no questions about it. And you've always been an inspiration. We continue to learn a whole lot from each other. Let's continue on that journey. Thanks for being such a great supporter for a long time. Johannes works at Hopkins. I'm also, I work as my day job at Hopkins as an orthopedic surgeon. And it's nice to have other colleagues in the Hopkins family also thinking outside of the box and doing other amazing things with investing. So thank you, Johannes, for those comments. Babaka.
Hi, how's everybody doing? I'm a firefighter in New Jersey. I currently own a 3-unit home, but I'm just looking to be more aggressive in real estate now. So this is why I'm just going to join a bunch of meetups, trying to network, meet people, learn new things, and just take it from there.
Very, very nice to meet you, Babaka. Are you sure you're not a R&B baritone singer?
Nah.
Yeah, because with that deep voice, you probably can have the FM DJ voice, my brother. You may have a future in maybe a little bit of radio or podcasting or something, you know. Yeah.
Maybe one day.
So very nice to meet you. I'm glad to hear that you're already investing and having you with a 3-unit already. That's incredible. And I think that's a great place to start. I think start thinking bigger. You know, you definitely have the ability to. If you have some decent cash flow on that 3-unit, now just start thinking to yourself, if this was a 15-unit, if this was a 45-unit, you know, how much more can I do with this? You know, so very nice to meet you. Hope to see you around again, many more times, and we look forward to helping each other grow in the near future. So,
thank you.
Yeah, my pleasure. The next person I'm about to introduce needs no introduction. Marshall Lehane. He is an incredible support system for XSITE. He has invested in every single deal that we've had. We have a couple of those people, and we call them the XSITE unicorns. So I'm introducing an XSITE unicorn here. It's an incredible guy, likes to be low key. Probably didn't want me to introduce him, but Marshall, even if you say just hello, please say something.
Actually, I didn't even want to be on video.
I know you didn't want to be. Yeah. So, but thank you for coming on video, and I appreciate it.
All right, guys.
Yeah.
I have listened to the whole thing. It's and as to go back to the question that somebody asked earlier, why do you spend your time educating other people? I'm out there these days educating my colleagues who have some money sitting in the banks who don't want to put it in deal like the one that Leslie and Oni and Tenny have had. Why? Because I think it's a great place. It is a great place, and I have seen the returns since I've done a few deals with these guys, and I think it's real. If anybody has a doubt, that's all.
Yeah, thank you so much, Marshall. Really appreciate you. Always do. I mean, at some point, I think we're probably gonna have Marshall present on the tax benefits and of being a passive, full-time passive investor, and maybe you'll be presenting from a beach somewhere in Hawaii or something like that. But that would be a great meetup someday. But yeah, thank you so much, Marshall.
Yeah, that's before I go, that was another thing. I have in the past 10 years, I had written checks to the IRS on sale. I started investing with XSITE. So if you guys don't like cash flow, but you don't want to pay too much in taxes, it will be another good reason to do it.
Absolutely. No questions about it. Thank you so much, Marshall.
Thank you.
I think the next person I have is Alfonso. Thank you. Good to see you again, Alfonso.
Nice to be here. I had a good week. I found an investor that's he's very motivated. So I have a deal coming this week for $2 million, no money down, lease buy. He said I can write up whatever terms I want, but my group wants to put a 4 or 6 unit building on the site. We're going to grow salmon, shrimp, crawfish, and greens, spinach, kale, and lettuce indoors. Just outside of, so I think it's a good, it's really a sweet deal. If he's going to let me write up my own terms and no money down. But is there money available to build a facility? I mean, a multi-unit facility. I want to learn how to go about getting a syndicate or whatever, people who want to invest in that, separate from the fish and the vegetables.
That's incredible.
There's not a lot of rental units in that area, and if not, it would be available for teaching people who want to come in and learn how to grow fish and vegetables and staff until they find permanent housing. So I'd like to talk to someone at XSITE about how to make that work.
Interesting. Yeah, absolutely. I think thanks so much for those comments, Alfonso. We definitely, obviously, it seems like you're combining agriculture with real estate, two fantastic asset classes. But I can tell you that we don't know much about agriculture, but we know something about real estate, and we'll be more than happy to we'll be more than happy to give you our feedback and kind of chat with you about, you know, some of the strategies that we've used in the past and see how we can synergize. So the best
How do
way
I
to go,
talk to how do I find someone to talk to about this type of transaction?
I mean, that's the best place usually is to start in your within your immediate network, you know, and to see, you know, who you can kind of bring in to something like this. Obviously, do you have a pitch deck yet or presentation?
Yeah, have a pitch deck, have a presentation, a business plan, website. I can put the website on the chat.
Yeah, please feel free to do that, because somebody in the meetup may be interested in that. But and
we're
just
paying 10%, 10% interest.
So and we'll be more than happy, maybe offline, to like chat with you about the details of it. If you send it to us, I could throw my email in the chat and we'll set up a Zoom call or something like that in the future.
That works. Yeah? That works for me. I'd like that greatly. Thank you.
Excellent. My pleasure. Yeah. I think we may be I have about 7 minutes, and there are still some people who didn't come on video, but if there's anybody on audio that you just feel like you're not able to come on video, but you still want to introduce yourself, please feel free to, I think we've gotten through everybody on video. So please feel free to just unmute yourself and just introduce yourself. I know I see my brother, Dr. Bolaji Olulade, who's one of our investors also on there, is an incredible supporter of XSITE. Oh, I see you still at work, bro. Yeah, so I think you're muted. You want to introduce yourself, Bolaji?
Yeah. Sorry about that. Yeah, I had to step out and come back in. So, yeah, Balaji Olulade, physician, brother to the CEO of this wonderful company and team of people. And been with XSITE the last 6 or 7 months. It's been a really great educational experience for me. I walked into this basically looking for alternate sources of income and to actually make income grow. And have always been interested in real estate, but only did it in the single unit space. And so my goal, one of my biggest goals, is to basically jump into this multi-unit space and actually learn and acquire information. Right now, I'm just a sponge. So
beautiful. You're a sponge and you're investing. It's a beautiful thing.
Yes.
And Dr. Olulade has been humble. He's a big administrator.
Don't listen to him.
In addition to his clinical duties. So keep on making us proud, man. We really appreciate you. Thank you. So is there any other person that wants to introduce themselves? We have about 5 more minutes. Anybody who's not on video that just wants to introduce themselves, we'll be more than happy to hear you. Oh, Mary Beth, look at that. I think you're muted.
Oh.
Yeah.
While Maribeth figures technology out, I'm just gonna give a shout out to a couple people in here. Caesar. Caesar is a colleague. I know he's probably on audio and doesn't want to come on camera. I just want to say thank you for joining. Nelson, thanks for joining. These are some people that I know from my network. Thank you guys for joining, and please don't hesitate to reach out to any one of us if you have any questions about anything along your journey or questions about your real estate investing. So
Shamil Rodriguez is also another person that's always that's been around, particularly recently. We really appreciate you, Shamil, for your hard-hitting questions and an interest in participation. So I think with that, I should probably just give you 4 minutes of your life back. We really appreciate you all for coming. We know you could be anywhere else in the world, but you're here with us. We don't take that for granted. As XSITE Capital, on behalf of my co-founders, Leslie, Tenny, and our fantastic team member, Braden, we just want to say thank you, and we look forward to seeing you again next week. I said next week. Well, maybe next week if you're investing in our land bank deal. But we'll see you again next month. And next month is who do we have coming next month? Leslie, I think it's
we have someone that has achieved financial freedom through passively investing in multifamily or real estate assets. This is someone that is completely financially free right now, just from investing passively.
Awesome. So for those people that are interested in the more passive part of this investing in multifamily, that would be a great meetup. And even if you want to be actively investing in multifamily, it would still be a good one to hear somebody who is passively investing and has gotten financial freedom through that, because then you can talk to your prospective investors about their experience, about how they achieved it. So either you're a prospective active or passive investor in multifamily, that will be a great meetup to attend. So thank you so much once again, everybody. We really appreciate you. Look forward to seeing you next month. Have a beautiful night. Thank you. Yeah.